Hello traders, good evening. After an extremely volatile expiry, we are now here to look at the market analysis for tomorrow, 2nd of September. The day has been rough and we saw moves that were essentially two-sided after a strong closing on Tuesday somewhere at the highs. Then we saw a major gap down opening in both the indices today, which then proceeded to make an up move, and then we started seeing a pullback correction emerge into the intraday trend. If we have a look at the market plan, the how the markets are shaping up from an institutional players positions data, I have started something recently from yesterday, sharing reference levels on a monthly and on a weekly basis. And if enough people are interested, I would do that on a regular basis. This was a price band. The 17,715 and 762 was a price band. The upper imbalance boundary, and 419,370, the lower imbalance boundary, was shared yesterday as the monthly references, the upper reference and the lower reference for Nifty futures. How will these locations help you? These locations will tend to act as areas where large player positions are present. Large players have essentially built positions in this area, and this is on a longer term perspective. So depending on where the price is, these locations will ideally act as points of low risk positional entries, and these references will not change. These references will remain the same for the entire month of September, because this is on a much higher time frame that we are looking at, and you can use them if as the data shapes up for the current monthly expiry series. I will also be periodically updating if there is any divergence between these large players positions and current series positions. Let us say if current series, the big guns are net long, we see a bullish bias in the market, but we are trading below the upper imbalance boundary, which essentially signals bearishness. Then those are not the times where you essentially should look to take a trade on an overnight basis, because there is now not much clarity with respect to control among buyers and sellers in the markets. Now, 17,715 to 17,662 and 17,370 to 419 are these references. If someone will ask me, can't we take an entry in between these ranges? Sure, you can, but you will not be getting the best risk to reward. The reason why I'm specifying these ranges are for low risk, high probability trades that you can pick up. Now, if we talk about the analysis for tomorrow, if we talk how the markets have shaped up today and tomorrow, you can see that from a volume profile, from a simple session profile perspective, we made a bell-shaped profile with a large volumes present in the center, which is a standard profile, a symmetrical profile. For tomorrow, if I look at Nifty, I'm looking at the bare minimum reference of 17,520 to go short. Below 17,520, there is a good chance we can test the lows and then eventually test the lower imbalance boundary of 17,420 reference. To the upside, I wouldn't recommend aggressive longs at this point now. Even if we move up, we have 17,715 to the upside, depends on where we open. If we have a flat opening and proceed to move up, then this reference with intraday low as your stop can be a very good point to go along with 17,715 as your initial target. But if at all we open with a gap up somewhere here, then there isn't enough risk reward for you to capitalize, as you have higher time frame sellers sitting right at 17,715. You can see how in the indices Nifty got rejected the same area where sellers started pushing prices low to the downside. This also busts another myth which I keep talking about very vocally, both in these videos and in Twitter. Whenever you see a gap up or a gap down opening and price starts to move inside the gap, there is no compulsion that the entire gap fill should be 100%. There is no reason, there is no law that states that the entire gap should get filled. This is purely a price action myth. This is exactly the reason why I don't prefer taking trades within the gap direction, because you can never say from where this particular gap would get faded. And these kind of opposite moves are only because of these opening players who can flip their positions at any point of time. I'd rather rely on the on the players who are controlling markets on a higher time frame rather than relying on those intraday. If all of them are in tandem, then yes, that becomes a very good trade actually to take. That becomes a high probability trade, which was not the case today, and hence you could see the volatility that had come into the markets. If you have a look at order flow charts, you can see the same thing in order flow. This is a 15-minute order flow chart. Moved it to 15 minutes to help you with your understanding. This is the reason. This is the same area from where buyers, these intraday buyers, booked profits. Tape was very clear in the aspect that buyers had booked out profit in this zone, and it would be a bit difficult for us to proceed upside from this area at this moment. You can see sellers coming in immediately and pushing down the prices. You can see how these large sellers had come in back to back, pushing prices below VWAP. As soon as they took prices below VWAP, then the actual move had started. It was also the same for Bank Nifty. In case of Bank Nifty, when I look at the Bank Nifty chart, this was the initial area where I tried to fade the intraday move. This was a location when I saw these sellers coming up, but then these buyers had one more round of up move before eventual absorption came in this zone. You can see the 1.6k, 1.1k contracts and the 1.3k buyers who couldn't hold the prices up, and they eventually booked out in this pullback to VWAP. And once we went below VWAP, then this became a clear downtrending day for the rest of the session with late evening pullbacks. Now, this is how this is one of the many uses that you can have of VWAP. It's not a blind buy or sell indicator, but it depends on the kind of the day's context that you are looking at. If it's a trending day, you need to use VWAP in a certain way. If it's a mean reversion day, then you need to look at VWAP in a certain context. Now, this is my upper imbalance boundary for Bank Nifty, and this is exactly where we opened, and we started moving up again. As I said, these levels will act as month references, support, resistances for you on a monthly time frame, and these guys did their job at open, and then we saw a down move right from around previous day's highs. If we look at Bank Nifty for tomorrow, we have formed somewhat of a P-shaped profile with not much downside buying pressure being seen, and the fact that we have closed somewhere in between the days range indicates that at this point there is a stalemate. It's the tape is rather neutral at this point between buyers and sellers, and in the tomorrow or in the coming sessions, whoever would take the prices past this current pivot high plus or this imbalance range will be taking control. So if you are someone who takes positions on a 1 or 2 day basis, on a short-term basis, expiry to expiry, then this is not the time for you to jump into a position, but rather wait and watch to see whether it's the large buyers or the large sellers who would be taking control of these markets. In case of Bank Nifty for tomorrow, I'm expecting a rotative market, somewhat range bound, with Nifty taking in charge compared to Bank Nifty, and we'll see how that pans out. I share my trades and updates in live markets on my Telegram channel. You can join. I also share periodically order flow charts, what I see in those charts and how I'm interpreting that, and it will be beneficial for you. If you find the contents of this video useful, please make sure to like and subscribe to the channel, folks. See you all tomorrow.